Section 10, Clause 10D of the Income Tax Act 1961, amount received in the case of life insurance policy. Now let us see the types of life insurance policies. They are term insurance plan, group insurance plan, endowment policies, unit linked insurance plan, that is ULIP, and other retirement plans. Any sum received under a life insurance policy, including the sum allocated by way of bonus on such policy, is exempt under Section 10, Clause 10D, subject to certain exceptions. Now let us see what are those exceptions. Subclause A, any amount received under Section 80 DD3. For example, Mr. A has taken an insurance policy for a disabled person. Now the disabled person dies before Mr. A. So the amount received by Mr. A from the insurance company is taxable in the hands of Mr. A. Subclause B, any amount received under a keyman insurance policy. Now let us understand what is keyman insurance policy first. A keyman insurance policy is a policy taken by the employer for a key or important employees of the company to compensate the business for any loss, financial loss in case of death of the important member or employee of the business. For example, in the case of a company, it could be its directors or the CEO or the chief operating officer or CFO, vice presidents, etc. They can be termed as important people in the company, and keyman insurance policy can be taken from them. Now, an employer takes a keyman insurance policy for an employee, and the amount received from the insurance policy at the time of maturity or death of the employee is taxable. Now, if it is received by the employer, it is taxable in his hands as business income, as profit and gains from a business or profession. If it is received by an employee, it is taxable in his hands under the head salaries. Or if it is received by the nominee of an employee, it is taxable in the hands of the nominee under the head income from other sources. Now let us understand subclause C and subclause D. Any sum of money received from an insurance company in case of subclause C for a policy issued on or before 31st of March 2012, and if the premium is paid in any year exceeds 20% of the sum insured, then the amount received from the insurance company is taxable on maturity. However, it will not be taxable in the case of death. Now let us see subclause D. For a policy issued on or after 1st of April 2012, if the premium paid in any year exceeds 10% of the sum insured, and any sum received from the insurance company is taxable on maturity, but it is not taxable on death. Now similarly, again, if you see subclause D, for a policy issued on or after 1st of April 2013, and it is taken for a person suffering from disability or severe disability as defined in section 80U, or under rules defined in section 80 DDB for a person suffering from a disease or an ailment, and if the premium paid in any year exceeds 15% of the sum insured, then any amount received from the insurance company will be taxable on maturity, but it will not be taxable on death. If amount is received from unit linked insurance plan, that is ULIP, which is issued after 1st of February 2021, if premium for one policy or premium for all the policies added together exceeds rupees 2,50,000, then it is taxable. If premium for one policy or premium for all the policies added together does not exceed rupees 2,50,000, and if it is covered under subclause A to subclause D discussed earlier, then it will be taxable as per those clauses. Otherwise, it will be exempt. If the amount is received after the death of the person, then it is exempt. Amendment in Budget 2023. If the amount is received from insurance company other than ULIP, which is issued after 1st of April 2023, if the premium for one policy or premium for all the policies added together exceeds rupees 5 lakh, then it is taxable. If premium for one policy or premium for all the policies added together does not exceed rupees 5 lakhs, and if it is covered under subclause A to subclause D discussed above, then it will be taxable, otherwise it will be exempt. If the amount is received after the death of the person, then it is exempt. Now let us see the important points under section 10, clause 10D. Amount received from the insurance company on the death of the person is exempt from tax, except in the case of keyman insurance policy, where the amount is taxable in the case of maturity or death both. In case of amount received under section 80DD3, the amount is taxable in the hands of the assessee on the death of the disabled person. In case of ULIP, one additional point to remember is that if the premium amount exceeds rupees 2,50,000, then the amount received from the insurance company on maturity is taxable. However, amount received in the case of death is not taxable. In the case of policy other than ULIP, if the premium amount exceeds rupees 5 lakh, then the amount received from the insurance company on maturity is taxable. However, the amount received in the case of death is not taxable. This is as per Budget 2023. Thank you. If you like the video, please click on the like button and subscribe to my YouTube channel.